right, good morning, ladies and gentlemen. Today we're going to go over key charting levels. We are going to use the pound USD for this example. We'll use the pound USD, USD CAD, and UK oil for today's example. And we will be reviewing key charting levels. What you see here and what you heard in the background was a couple binary options trades. Um, those were one, of course, as usual. I'm actually going to enter a couple more, so bear with me just a moment. While I go ahead and get those underway. Levels are done on the monthly through the 4-hour time frames. All right, the key charting levels are done on the monthly through the 4-hour time frames. And when you're doing so, I like to label them all specifically like you have seen in the previous videos throughout the course. So let's go ahead and begin. As always, we're going to use the same top-down methods that I have been preaching and teaching about over the course of the last 5 years and throughout the videos on my YouTube channel, as well as throughout this course. First thing we're going to do is, of course, hit the high, low. Now, you come in here. When I mean label them, I'm talking about actually entering a description and a name inside that horizontal line's properties. For example, this is the all-time high. So we're going to write all-time high here. We can copy it, add it twice for the name and the description. All right, you don't see it pop up there just yet. So what we'll do is we'll come in here to properties, show object descriptions. You'll see it down here, show object descriptions. All right, and now you'll see it right over here, all-time high. Now, give me just a moment because you can center that. All right, but for now, we're just going to leave it just like that. Now, as always, you see over here to the right, we are going to round that number as well. There we have it. All right, we're going to do the same thing to the low. Instead of all-time high, this is the all-time low. You see where it's at? We're going to round that. Bingo. Easy peasy. Now we have the all-time high and the all-time low label. This is what I'm speaking of when I'm referring to charting your key levels. Also, go back in here, touch up your zone with the body on both of these key levels. Well, all of the key levels. I'm saying both because I've only done two, but as we go further, of course, you'll see many, many more. With the body on both of my charted key levels. Want the body on both of my charted key levels, and they're both labeled, so they're easily identified just by looking at my chart. Now, anybody who comes in here and looks at my charts can see exactly what both of these levels are and what they're indicating. Now, of course, we'll use our Fibonacci. Now, using our Fibonacci, we know we have to go from left to right. So the first identifiable swing is from here. From left to right is right here. All right. So let's go ahead and hit that key level. We see where it's at, 1.3704. We'll round that to 1.37. We'll come in here, zoom in a little bit. We can take these shifters off so we can scroll. And now we can get a little more precise, and we actually see that that is at 1.377 rather than 1.370. Now, what level is this and what do we label it as? Since we see that it was a swing, we'll put that at the low of June 1st, 2001. So we will label this particular zone as the low of 2001. Low of 2001. We'll mark that zone with the body, and we'll drag it across. Now that we have the zone measured in there precisely, we can zoom out just to get it all the way across. All right, and now let's go ahead and drop our Fibonacci in there now. Swing low to swing high. All right, now look how it paints such a detailed map across the board for us. And this isn't just today's data or yesterday's data. This is all of the data ever provided for the history of the pound USD. Remember, we don't start with today's data. We start with everything. All right, we start with everything. There's no point of we see everything. You got to verify top down before you can even start with what's going on today. So we see how the market has mapped out for us. Now we can label these as, let's say, for example, we know based on this swing from here to here, we know on our Fibonacci, we know TP3 is in fact the 61.8 retracement. So we can label this $61.8 retrace monthly. All right. Now remember, once we mark those zones, we come back and we highlight that the entire zone. So now this is the movement that we have mapped out on our monthly time frame, and our key charted levels are identifiable so far using our monthly time frame. Next, we can apply a trend line connecting these swings here. Here we'll label this monthly bearish trend. Why? Because this is a bearish trend on the monthly time frame. Keep it simple. So now we have a monthly bearish trend identified on our charts. We also have monthly key charted levels identified on our charts. Now that we have finished and completed the monthly time frame marking our key charted levels, remember we're only going down to the 4-hour time frame. So now we can simply easily bump down to the weekly and see what now key charted levels we can apply. We can still see the key charted levels from the monthly time frame. We have the all-time low, we have the low of 2001, and we have the bearish trend line. So those are the three key levels that we can apply in correlation to the weekly chart that we are now about to begin work on. So beginning work on the weekly, this data here based on the past 5 to 6 years is really all we need because we have two of the higher time frames charted levels within our view. So we don't have to go looking for key charted areas because we know we have at least two right here. So we don't have to go looking for more because in order to get to those other ones that we could potentially go looking for, we would first have to suppress either one of the ones within our view now. Before it can go long term, it has to go short term, but we want to read long term before we know the short term. It's easier. If you know which way it's going long term, you know where it's going short term just by default. So it's just easier to know the whole thing. All right, first we're going to apply, starting from left to right, we can see that there was a dip or a continuation to the trend applied right here, right above the low of 2001. Right here. All right. Now we see that over there to the right, it falls at 1.496. 1.49698. We're going to drop that and round that off to 1.469 flat. Excuse me, 1.496 flat. We're going to label that as the high of 2000 and let's see, that is the high of June 2016. So we'll label this high of June 2016. All right, remember, next we do with the body. Every key charted level has a with the body zone that we must identify. You can color it a different color since we know we're now on the weekly time frame and no longer on the monthly. All right, now using this swing, we know where the next swing is because we can just see that right here on our chart. It's right here. So using our Fibonacci, easily identified, is now the potential bullish targets for this current trend. Now, looking at this chart, we can see that we are now at the all-time low and we have began to form a double bottom. Based on price action, this is a really good and a really ideal area to be buying and laying down long contracts for the pound USD. Remember, this is the long term, so this is on the weekly time frame. So this is an either make or break area for the pound. Now, as far as another key level, let's go ahead and inside of this zone, we can see several key levels. We can see one here and one here, which also forms a double bottom. So let's go ahead and play with this one. This one's going to fall at 1.19788. We'll round that to 1.97. And we'll label that as the low of 2016. The low of October 2016. Low of October 2016. We go with the body. And now notice how price now falls right within that category. Right within that zone here. All right. Next, we'll work with this area here. And we see that's at 1.338. We'll lock that in at 1.338. And we'll swing that as the high of January 2019. All right, now within there, of course, we'll go ahead and label that, highlight that zone, which can be seen there. Okay, anyway, right there. All right, now we have an even bigger picture painted for us. Now, from this picture, we can now see where the current weekly swing here on the pound USD is heading and facing. So we'll use the most recent swings here, which are from here to here. The high of January 2019. As a matter of fact, let's go ahead and indicate that key level before we even pull that Fibonacci off. This is the low of 2020. And we'll hit that at 1.14556. We'll round that to 1.1445. We'll call that the low of 2020, exactly what it is. Remember, wick to body. So now we have that zone highlighted. Now from this point, we'll go ahead and then apply the Fibonacci from the high of 2019 to the low of 2020. That's the most recent swing. So now from here, we have an ideal target and an ideal map for the bulls in this situation here on this currency pair. So now, with that being said, for educational purposes, there's a long position available here on the pound USD from the low of all time. All right. Now here for educational purposes, we have a trade in, and we're going to take that long here. Potentially up here, the TP6 based on the zones and the key charted levels that we've applied here on the monthly and the weekly chart alone. Remember, the key charted levels are placed on the monthly and the weekly charts, the daily charts, and the 4-hour charts only. You do not go below the 4-hour chart for key charted levels. Anything below that is an entry level or an entry zone opportunity once found or approached. And there we have the key charted levels mapped out for the pound USD on the monthly and the weekly time frame. From there, we'll move down to the daily. And here on the daily, we see how price correlates right in line with the weekly and the monthly analysis that we've done. But we can even further sharpen our viewpoints by doing the exact same analysis to the weekly, that we did to the weekly chart here on the daily time frame. So, with that being said, we'll do just that. Now, looking at the chart, we can see some levels identified here by the Fibonacci. We can see that we have a swing there at 1.27042. We're around 61.8 retracement, 61.8% retracement on the daily. All right, and we'll remove that. And from there, we will take our zone and let's drag it from this particular doji wick to the body here. And we can see how price, give me to drag that. That was at 270. There. Now we see how price is respecting and now within a range here on this cycle here. Now looking at the daily, the most recent swing of able to be applied by the Fibonacci is going to be from here, which is the high of April 2020 and the high of May 2020. So far, the areas that we are now looking at are both the high of April and the high of May. So right now, we are currently ranging with price in between the highs of April and May. So for the last 2 months, price has been ranging within the 1.218 range and the 1.27 here on the pound. Give me one moment. There's some more binary options trades available to me. Here on the hour chart, those can be seen. As you see, we're taking off straight out of that zone that we are now in on the daily. So as we take this trade, as I take this trade here now, being that I'm timing it perfectly at the 1 hour mark, we'll review this trade as we move forward. Okay. Now, let's go back here to the daily. Now, as you see here on the daily, we are in that buy zone, buying off the low of October 2016. We've seen that here applied by our long-term analysis done on key charting the monthly time frame. We saw that here. So now here on the daily, we're in that zone as well. Here on the 4 hour chart, we're in that zone. And now we can really begin to apply some potential entry points. Now, as I said, we are ranging in between the highs of this month and last month. So at some point within the next few weeks, I definitely expect price to either stabilize or get it extremely worse. In my opinion, price will stabilize first. So that's why I am buying into the pound and against the dollar. I do expect a rebound, then I do expect an ultimate collapse forever and for all. So with this being said, we're going to ride all three of those waves. So now we have what's formed is the current most recent swing, which is from here to here, based on the daily price action. All right. So now, based on the daily price action, this is the most recent. This is the most current daily swing. The most recent, the most current daily potential targets. What we're looking at here on this Fibonacci. So what we're in now is the most potential best buying entry opportunity to catch the wave to potential TP5, 6, and 7. All right. Now that we've done the analysis here on the daily chart, we can go ahead to the 4 hour chart. Remember, once we get down here to the 4 hour chart, we don't really have to indicate any more key charted levels. Now all we have to do is look for places of entry and precise opportunity and optimal profit levels, which are seen based on the Fibonacci and price action combined here on our charts. So here we can see that we're actually looking to extend the high of the day as well from within this zone. So here, based on our targets, on just today's simple entry, we can I can expect to, if price breaks out through here, based on price action, we can expect TP5, TP6 to be in the future as well. So again, for educational purposes, this is a very prominent opportunity to go long in the market with the pound USD. So that, ladies and gentlemen, are the key charted levels on the pound USD. Now what I will do is I'll come in here and we'll go ahead and save this template as and we'll save. Now what we'll do is we'll proceed to move on to the, what was it? We're going to do the CAD. So now let's begin to do the charted, key charted levels on the USD CAD. So, beginning with the USD CAD, let me go ahead and get these previous zones and markups off the charts. Here, beginning with the USD CAD. Again, we want to see all-time data. We'll go ahead and hit the all-time high over there, 1.6131. We'll round at the 1.61 for now. We'll see where that ends up once we're done painting. All-time high. There we have the all-time high. Again, we have to go back in here to properties, show object descriptions, and now it's applied to our charts. Now from there, we're going to take over and come down here to the low. We have 0.9153, 0.915. All right, so let's go ahead and now hit our zones with the body. Now we have our with the body. We can go in with our Fibonacci. We see a swing from here to here. Boom, boom, bam. Now we have more zones to work with. That is the high of 2015, 1.458, around that to 1.45. All right, again, zone with the body. Now, if you notice, where we're at now is a big, big, powerful area of resistance. All right, so really just basically at a glance, I can almost instantly predict this situation happening. Almost instantly with no effort. All right, so yeah, basically what I can see from a long term, from a stand back, quick glance, um, this is what I expect to happen here. Okay. Let's see. Okay, so yeah, to carry on from here, let's go ahead and let me get that out of the way. And now to carry on from here, you see we're coming off of the high of 2015. We can indicate this. Let's highlight this area here. We'll call that 1.0302. And we will hit that description with the high of 2009. That's technically the high of 2000. Let's put it 2008, just to be 100% precise. All right, just to be precise, we'll call it the high of 2008. Now here, we'll indicate this as the low of 2017, 1.221. We'll call that the low of 2017. Remember, we are charting key levels here, all the way down to the daily time frame. And once we have zones like this, we'll simply highlight the whole thing. All right. Now, based on the monthly, we see exactly what we're working with, and we'll take that down to the weekly here. Now, in the weekly here, we see that price has been in the range. Now, inside this range, we can hit some marquee levels right here. We'll call that 1.308, 378. And that will be considered the high of 2017. There we have it, the high of 2017. We'll again highlight that with a wood to body zone. And there we have it there. Now, notice how the high of 2017 is where the spike occurred here in 2020. All right, just keep that in mind. Now, looking at this weekly, we can also see the most recent completed swing is from the low of 2017 all the way to the high of 2020. All right, now looking at a long-term standpoint, just looking at this picture, we can see that for a long-term basis, we can take UCAD down for the next decade. All right, and now as we see that by charting our key levels, that becomes more and more clear as we begin to go down to the daily. Now, here on the daily, we can see how prices being extremely rejected from the monthly and daily key levels that we have already charted on our charts. So now, losing the daily time frame, we can pull our most recent swing from swing low to high, from left to right, and now we have a blueprint for the next identifiable path for the bears in the UCAD market. We're coming off from above the high of 2017, should be coming crashing down straight through it to seek out new all-time lows, or at least seeking new lows for 2020, and possibly retouching the supportive areas from 2017. So we should be coming in this area based on the law of numbers and the Fibonacci ratio. We should at least see TP6 to TP7 before any potential reversals, if not even TP8, which will create all-time new lows for the USD CAD pair over the next 10 to 15 years. Now, this information is only identifiable by using the top-down analysis and charting levels above the weekly and monthly time frames, or as well as the time frames as big as the weekly and monthly time frames. Now, once you get down here into the 4 hour, really, it's almost in plain sight what you should be doing at this point. Once you get down here, it really makes trading a lot more easy. If you look here on the daily, as you see, we're coming out of TP1 headed to TP2, so we know that's an entry point for the bears. If that's an entry point for the bears, that pattern of that price action setup should be more and more clear here on the 4 hour chart as we go lower. As you see, it is exactly just that. If we take our most recent swing on the 4 hour chart inside the swing on the daily, which is showing us that the monthly chart is being rejected and the bulls are in fact in the market, we now see that here on the 4 hour chart, it's a prime entry to continue on with the daily and monthly time frames. I know that was a mouthful, but yeah. This is what I do. I can go on and I can give you a million reasons why I did what I just did. I could go on and on till next week explaining exactly why I did what I just did. I could go on and on and on about why I did what I just did. There's no question about why I did what I just did. So there's never a question on why I do what I do when I do what I do if you really think about things and really analyze things. There's never a question. And that's exactly how I apply things to the market, things to my everyday life. If you pay attention, there's a never a doubt. There's always an explanation on why I do what I anything that I've done or why I do what I do, and that's especially precise in the forex market. If you don't know why you did what you did, when you did what you did, how you did it, you had no business doing it. You should have a justifiable explanation for every decision you make, or it's impractical and makes no sense. All right. Thank you for tuning in. If you have any questions or comments, please feel free to reach out to me or leave any comments directly below this video.